Good afternoon, everybody. It's Michael Fajardo from Seven Investment Management here. Thank you all for joining us today. It was a momentous night last night in American politics. I'm delighted to be joined by Chris Darbyshire, our Chief Investment Officer. I'd like to thank him and his team. They worked here overnight to try and protect our portfolios as much as they could, and he'll be talking about what we did in preparation before the vote and how the markets unfolded and what's been going on since. Before we get started with Chris, just a few housekeeping comments. As always, we're happy to take questions and we'll be answering as many of them as we can at the end. The way you ask questions, at the bottom of your screen, you should see a purple box that has a Q&A there. You open up the box, type in your question and press submit. We will answer as many of them as we can. Any of them that we can't answer, we will be able to pick this up with you offline. Now, Chris, before we get started, I remember after the EU referendum, when the result from Sunderland came in, you said this is going to be a long night. Was there a moment like that last night?
Yeah, 3:26 a.m. In our notes, we kind of keep a team notebook now. It wasn't my notebook this time. I think there's a comment for me, I think it's all over. And yeah, that was the moment we threw the towel in on a Clinton victory. So funnily enough, you know, we'd all come in thinking we would be buying stock market assets. We took a bit of risk off on Monday ahead of the vote because we felt there was really no upside to a Clinton victory, or very little. And with Trump still at 20-30% probability, that was a significant risk of a nasty event that we really thought it was worth avoiding. So we took some money out of Asia Pac. Emerging Asia position has been a big overweight for us. It's been a successful position, but we felt China was really in the firing line if Trump got elected. You know, so much of Trump's campaign rhetoric has been about China cheating Americans out of jobs, manipulating its currency. So we took our profits on that position, or we cut it back to neutral from an overweight position on Monday. So you can see from the slide, this was quite a big debate we had last week over whether we should take more risk off. We've been reducing risk in the portfolios over the last few months, really because we felt political risk was reasonably elevated. Economically, the world's okay, but with Trump and then with the Italian referendum and with Brexit still going on in the background, we felt markets were vulnerable. So we went into last week with a relatively low level of risk. As I said, we took more off on Monday. The other thing we did on Monday was we took most of our dollar exposure and flipped it into yen exposure. So hedged the dollar, bought yen, and the basis for that was if Trump got elected, we felt the US dollar might not be a safe haven anymore. And that didn't leave many currencies out there that would be safe havens. But the yen was one, Swiss franc was the other. We opted for the yen. And that trade has paid off really well during the day, as indeed did the decision to reduce emerging Asian equity exposure. We discussed gold last week. We felt we would be selling it if Clinton was elected. Well, she hasn't been, so I think we're at least holding on to it, possibly buying more. And as a result of yesterday's moves, we do have a high level of cash in the portfolios. And I think we're not quite at the point where we use that cash. But as we go through this presentation, I think it will become clear that this is a game changer of a type. We don't quite know whether it's a good one or a bad one yet. So we're still thinking about that. So what happened last night? This is actually a chart of the last few days. It's the S&P 500, so the US stock market. This chart covers Friday last week, and then Monday, Tuesday, Wednesday. And I put an arrow on the chart to show you Wednesday's stock market performance. And we went into Wednesday actually up a bit, as you know, the probability of a Trump victory was very low. The markets were almost celebrating rather like they did pre-Brexit. And then immediately, everyone's hanging on Florida. So, sort of 1 in the morning, Florida is not being called, it's too close to calls, that immediately puts people on the back foot. And then Virginia, which everyone thought was a slam dunk for the Democrats, as Clinton's running mate came from Virginia, suddenly that's not a slam dunk and that's going the other way. And then you have complete market panic sets in, and it's really like Brexit, just felt exactly like the night of the EU referendum. Markets hate uncertainty, markets hate people renouncing free trade agreements. Markets think it's bad for economic growth to do this. So you've got those fears there on the chart as the S&P plunges. Now, interestingly, it's recovered all of that ground. This chart was taken earlier this morning, but all of that ground has been recovered. You could look at the S&P today and not realise that Trump had been elected overnight. So some strange things are happening in markets. Markets, vacillating a great deal, a lot of intraday volatility, but, from beginning of day to end of day, not so much. At the worst point during the night, developed market equities were down 4 to 5%. The S&P actually closed at one point. The futures went what's called limit down, which means that the market shuts down temporarily. We had the Mexican peso off well over 10% against the dollar at one point during the night. Emerging markets down 3 to 4. Interestingly, emerging markets falling by less than the developed markets. And I think that's, it reflects the fact that this is a problem in the US, and the US has been a safe haven stock market for a long time, no longer is, or certainly wasn't during the night. Initially, Treasury bonds gained, again another safe haven, but they since have absolutely gotten crushed during the afternoon. So initially they did very well, and they've now since done really, really badly. So the market has turned 180 degrees against that particular safe haven. And then we were very happy that the yen did its job for us, as we had hoped. So all in all, I think very happy with the things we did on Monday, very happy with the portfolio positioning. We think the balanced portfolio down about maybe 30 bips. On tomorrow's NAV, which I think is a good result given the kind of cataclysmic nature of what happened. And I think the real surprise for everybody, of course, pollsters completely wrong again, the bookmakers completely wrong again. We had a Republican sweep. So Republican president, Republican Senate, which not many people were banking on, a Republican Congress, which I think people were expecting, but very much more convincing than anticipated. So that was a big change. Now we've got a lame duck period until January the 20th, when Trump is formally inaugurated as the president. And during that period, Trump's got some work to do. He's got 4,000 members of his administration to hire. He's got to really begin to outline and detail his policies as he really achieved this success without much in the way of, framing his policies. We really don't know what his policies are. Many of them are frankly unachievable, will not be approved by Congress. So when you look at his policies, you kind of have to take them with a pinch of salt and think to yourself, okay, so how far will that one go to be implemented? And when it's implemented, how will it look? And will it have the kind of consequences that you might think it would have in its current form? So there's a lot of uncertainty around that. What does this all mean? I'm going to spend the rest of the presentation on this slide. Why did this happen? Okay, so Trump is a businessman. He's not a career politician. In fact, he has almost no experience of government or foreign policy or running an administration. All of these things that you'd think you'd want to have in a candidate. And I think the fact that the electorate, the American electorate, has chosen him over someone who's, okay, corrupt maybe, but in the way that all politicians are somewhat corrupt. And, you don't get to the top in politics without some sharp elbows and manoeuvres. I think the American electorate absolutely sick of the logjam in Washington. You know, policies not getting enacted, the president vetoing laws that Congress puts forward, you know, Congress voting down the president's initiatives, all this kind of logjam over appointing people to the Supreme Court. Don't forget the government shut down in Washington, D.C. in 2013 because no one could agree a budget. So I think there's a feeling that the politicians aren't really doing their jobs and that the electorate needed someone different to break this up. And what's amazing is that Trump achieved this success despite not really having any on-the-ground campaign. He didn't have people knocking on doors, you know, drumming up support with telephone calls in the last, you know, hours of the campaign, whereas Clinton had all of that. And also, you know, Trump had other disadvantages. He didn't really have anything like the funding that Clinton had. You know, he didn't release his tax returns, which, you know, would have turned some people against him. You know, there was the locker room talk. You know, he had all these disadvantages on the way to becoming president. And what that tells me is that if he hadn't had those disadvantages, his would have been an absolute landslide. And what's going on under the surface in America is a bit like we saw with Brexit, is this real massive surge towards anti-establishment, towards populist candidates, and people rejecting the political status quo. Now, we see this, we saw it in Brexit because, you know, it gave people a chance to vote directly on something. So you can kind of, you know, we threw out the parliamentary system with the EU referendum and gave everybody a direct vote. And of course, in America, people vote for the president directly. It is a direct vote, equivalent to a referendum, albeit with some, you know, some differences around the way votes are allocated in the Electoral College. So I think, you know, this populist surge has been around for a while. I think it's a sudden thing, but it hasn't been expressed. And the US election, like the EU referendum, gave it a chance to be expressed. Okay, moving on. Also, Trump promised so much to the US electorate. He promised a massive tax cut to everybody who pays taxes in the US. And I use the word massive because that's the word Trump used. So this is in his website, which outlines his policies, massive tax cuts. So there's a very clear financial incentive on people who work and pay tax to vote for Trump. He also promised to cut business taxes by 20 percentage points from 35 to 15%. And that's an enormous tax saving that will help businessmen. He promised to make childcare fully tax deductible in the US. So think about that. You know, expenses on nannies, expenses on, you know, paying for nursery for your kids, all of that will become tax deductible. This was a massive handout for Trump. He also promised to repatriate US jobs. So all those jobs lost to China, he promised to bring back to the US. And the way he's going to do this is through a huge infrastructure spending program, which, you know, he's promised will be in the region of $1 trillion. So, you know, we're thinking, you know, this is credit crunch, QE type numbers, absolutely huge numbers. And what he would do is use US workers to build this infrastructure, and he would use US steel, manufactured in US steel plants to build the infrastructure. And this covers, you know, transportation, new airports, new railways, new electricity grid, clean water projects, and, you know, this is an incredible amount of state spending. So you've got these promises, on the one hand, to massively reduce taxes, on the other to spend lots and lots of money, and that kind of then brings the jobs back to America. So, you know, I'm a cynic. I think the politician that wins the election is the one that most effectively bribes the electorate, and in particular bribes the swing voter, and it's always been that way. So in a sense, maybe this isn't a populist anti-establishment movement. Maybe this is just normal politics, but Trump was a more effective salesman. Important point here. Trump now has a very strong mandate. Because of this sweep of all the houses in the US, he is actually going to get some of these policies enacted. And no one was expecting that. You know, when we did the research going into the election, there was talk of Clinton winning the presidency, but maybe losing Congress, winning the Senate, or Clinton winning the presidency, but not winning Congress and not winning the Senate. But no one was really talking about a Trump clean sweep. So we've now had a real sea change in our expectations for US policy over the next, over the next few years, and in particular, I think over the first 100 or 200 days of Trump's presidency, where we'll begin to see some of these policies, kind of being put down on paper. So what will characterise these policies? Well, there are three core principles to Trump's policies. One is immigration is bad, second is free trade is bad, and the third is the US should become more isolationist and not be the world's policeman. So let's have a think about some of these policies in detail. First of all, on immigration, Trump has promised time and time again to build the wall. This is the wall between Mexico and the US, and I think he has to do it. I don't think he can promise this as much, made it such a kind of a plank of his policy agenda and not build it. So I think this actually goes ahead in some way, shape or form. Secondly, on free trade, clearly he's got a very anti-free trade agenda, and investors and economists all believe that free trade is good for growth. So if he really goes ahead with this agenda, then economists are going to mark down their growth expectations. And this is a really serious problem with the Trump presidency. What might he do in terms of hurting free trade? Well, as I've said, his hostility to China is really remarkable. He has promised to impose 45% tariffs on goods imported from China, and that's one of the reasons, as I said, that we sold the emerging Asia exposure Monday morning. What could he do? I mean, in practical terms, he could direct the Commerce Department to bring anti-dumping or other kind of trade infringement cases against China. That then gives him the ammunition he needs to impose tariffs. What else could he do? He could withdraw from the Trans-Pacific Partnership. This is a treaty that's been agreed but not ratified by the US Parliament, and is basically dead in the water. So this is a huge trade deal. Took years in the making. Was going to be the largest trade deal for 2 decades. Now completely dead. He has threatened to withdraw from the North American Free Trade Agreement, which is a free trade agreement between the US, Canada, and Mexico. This is not quite so easy to do. Will require 6 months' notice and probably a law change. But the fact that he's even threatened this, I think, is significant. He has even threatened to withdraw from the World Trade Organization, which is the biggest of all trade agreements. This is America stepping back from being part of the international framework. Having led the free world, having led the move towards globalization for, really 70 years since the end of the Second World War, the US is now becoming inverted, becoming inward-looking, becoming just going missing, really, from global trade. That will leave a vacuum. That vacuum will be filled by China, which of course is stepping up its role in the global financial framework. And I think it's significant that the renminbi is now, considered to be a reserve currency by the International Monetary Fund, just as the US dollar, probably ceases to be the currency of choice, or will soon cease to be the currency of choice. So what's going to happen here is that the US is stepping back, China will step forward, I think, and fill that vacuum. By the way, what would trade war against China actually look like? Well, I mean, it's still tail risk. It's not, we're not sure it's going to happen. It certainly would happen if he imposed 45% tariffs on Chinese goods. It would look very ugly. There have been some, scenario analyses done from think tanks in the US on what a trade war could look like. But, it's probably going to involve a US recession. It's going to involve massive unemployment in the US because those tariffs make imports much more expensive, which means the average consumer has less money left over to spend. So it's very bad for consumption, and consumption has been a critical part of the US economy. So trade war is a very bad outcome here. And then we've got America's isolationism, and so Trump has been very clear that he thinks America's commitment to NATO is too much. Its commitment to its Pacific allies, mainly South Korea and Japan, is also too much, and he wants to take a step back. And to be fair to him, the US got entangled in Iraq, made mistakes in Afghanistan, and so I think there's some good rationale by wanting to step back. What does that mean for the world? Well, I think it means the EU will have to step up and fill the gap that the US used to play, fill the role that the US used to play in NATO, which means more military spending and defence spending by Europe. It means nuclear weaponization in South Korea and Japan. So Trump has effectively said to these countries, we're not going to pay for our military to be stationed there anymore. You're going to have to go out and find nuclear weapons. So again, post-Second World War, the US spent 70 years trying to stop nuclear weapon proliferation, but it naturally wants to be one of the few countries that has nuclear weapons, and now it's turning around and saying, go ahead, support yourselves, do what you like in that respect. So a real big change in the geopolitical environment. At the same time as sort of pulling back from the US's role as global policeman, he has promised to destroy ISIS, which means putting 20 to 30,000 troops on the ground in Syria. It appears there will be a closer relationship with Russia, which is possibly a good thing geopolitically speaking, although it perhaps, I think, emboldens Putin to do more land grabs, and the Baltic states are very much in the firing line there, which would be a serious geopolitical problem. Trump has also promised a bigger army, many more ships, many more planes, and you know how much these things cost in today's world. And so these are huge, huge commitments to spending. And when you put these together with the commitments to infrastructure investment, the $1 trillion I mentioned, the commitment to massively reduce taxes both for companies and for private individuals, you have got a problem. You've got an impossible task here. These promises cannot be funded without a big increase in the deficit, without a massive issuance of government bonds, and I think that is the market that really will suffer in the short term. So I think you can draw a direct line from Trump getting elected to the end of the bond bull market, and that is indeed, I think, what we've begun to see today. The bond yields have been ticking up over the last few months, but that was nothing compared to what happened to them today. I think the other reason that you worry about government bonds is the independence of the Fed. So Trump has accused Janet Yellen of being politically biased, and this is a really damaging accusation. By the way, Fed governors and the academics on the Fed are always left-leaning, so your Republican president is always going to have this problem. But he's made a very sort of direct personal attack on Janet Yellen, and that, I think, undermines people's belief and good faith in the US government bond market. So I think we're really worried about government bonds. We don't have a lot. We've been really underweight bonds and fixed income in the portfolios for a long time. So I don't think it's a worry from a portfolio point of view, but I do think it's a worry from a capital markets point of view. And then we come to the equity markets. What does this mean for the equity markets? I think it's just too early to tell. So, I wish I had an answer. We're still thinking about it. On one hand, it could be very bad theoretically. The damage to free trade, the implied damage to economic growth, the kind of mad policies that will result in big government deficits that will eventually result in big taxation. This is all ultimately bad for equities. On the other hand, in the short term, there are some real positives. So if you cut corporation tax by 20 percentage points, that's obviously going to help company profits a great deal. If you boost consumer spending by lowering personal tax rates, and to give you an idea, the highest tax rate in the US, Trump has promised to reduce from, I think it's 38% to 25%. So a massive reduction in personal taxes. And that could be very good for consumer spending in the short term, and therefore could provide a real fillip for the stock market. There's a boost to the banking sector. So Trump will repeal Dodd-Frank, the rules that really heavily regulated the banking industry in the US, and had a knock-on effect, I think, around the world. So the banking sector stocks are off to the races today. So there are some things here that are going to, I think, support the equity market, and there's some other things that theoretically will hurt the equity market. And I think we just need to think about, do we want more of that kind of risk right now? And that's a decision that we haven't yet made. But no doubt about it, this is a game changer, very significant event. It will break this sort of slow recovery we've had wide open. You're not going to hear the words new normal, I think, ever again if Trump gets some of these policies enacted. So yeah, there is a sea change going on out there. I think the message to our clients is portfolios have done really well. This is not a problem from a portfolio point of view. I think it makes our life as investors more difficult going forwards, in the same way that Brexit created great uncertainty. But we're able to cope with that. And as long as we keep making the right decisions, I'm not too worried about that. The right decisions are out there. I think we'll make them. But I think, more uncertainty, unfortunately, is kind of the name of the game.
Thank you, Chris. We've had a few questions. As I mentioned before, if you use the Q&A box at the bottom of your screen to send them in, we will try and answer as many as we can. So the first one, Chris. Do you feel that all this will have an Animal Farm type outcome as Trump becomes politicised over time and finds that he cannot deliver what he promises?
Yes, I do. He cannot deliver on these promises, and he will end up being the man who promised too much. And that may all happen relatively quickly. If Congress decides not to play ball, not to support him, then, within his first 100 days, he will have let down his electorate. However, it might not happen quite like that. Because he has such a strong mandate now, because every Republican congressman owes him a job, I think he will get some of this stuff through. So he will deliver on some of it. And where he doesn't deliver, maybe, he'll find a way to argue that he delivered through another channel. So I think it definitely ends up there. I think the question is absolutely spot on, but I think it might take a while for people to realise that.
Okay. How long do you expect the revised portfolio positioning to remain in force, and what are the most likely triggers for a further revision?
I think there will be revisions in the very short term. I think the Trump election itself is a trigger. What we've seen in bond markets today is a trigger. The fact that equity markets fell out of bed but then recovered, all of those losses is also a trigger. So, no doubt about it, we'll be acting. So I think it's, measured in days rather than weeks before the portfolios begin to change.
Okay. Do you expect bigger market moves come January time once he gets the keys to the White House?
Yes, I think that's, well, maybe not bigger than today because we had some big moves intraday today, but I think, volatility increases as we learn more about his real policies. So you remember, he's got to where he's got to without outlining in any detail his policies, without outlining how any of this is going to be financed. So that will become clearer, and I think it's going to be this kind of question I've set out of bad for trade, bad for economic growth, but maybe good for the stock market. That becomes starker and more obvious to people over the next couple of months. So yes, I think I'd agree with that.
Okay. You've mentioned before the dollar as the safe haven currency of the world. Is this under threat with Trump now in power?
Yep, very much. I mean, we saw it overnight that the dollar initially wobbled. I don't think the US bond market will sell off and the dollar will not sell off. I believe it goes hand in hand because he is devaluing the main asset that people hold their US dollars in with his policies. So, yeah, I don't think it's a strong dollar world. I think it's a strong renminbi world, and I wouldn't be surprised if it's a strong euro world. Because remember, this is making European politics look actually reasonably okay.
Well, on that matter, we've had a question that's asking, with these shock results that have come in, will this increase or will this lead to further European elections in the coming weeks and months?
Yeah, so I think the populist revolution, let's call it, it is present in Europe as well. And we learnt our lesson from Brexit. You've got to take people like Trump seriously. Hence, we were doing the things we were doing on Monday morning. And I think you've got to then read across from Trump and from Brexit to Europe. And you've got to say that the risk to incumbent European politicians is bigger than it was, that this kind of under the surface current towards populist politicians away from the mainstream is bigger than we thought. I think we're seeing it, but we're seeing politicians begin to react. So Theresa May has set out an agenda for the Tories, which is incredibly left-wing by traditional. She's basically ditched Thatcherism completely, and I think you're going to see the same thing happening in Europe. So what will happen in Europe is the incumbent politicians, the mainstream, will react, and they will shift leftwards, and they will shift to a more anti-globalist position in order to defend themselves. Whether that will be enough, I don't know, but they've got some time to react at least. Yeah.
Okay. I'm going to put these two questions to you at the same time. Firstly, after his comments on Janet Yellen, A, is her position under threat, and B, the rate rise that was expected in December, will that be put on hold?
I don't think Yellen's position is under threat. I don't think he has the power to remove her. He can certainly make life difficult for her. He can make comments about her in public. But I think she, will work out the rest of her term, which ends in 2018. On the rate cut, when the markets were down 4-5% this morning, I think people were wondering whether the rate cut would really happen, and we actually saw the probability of a cut decline to about 50% during the day. Markets have come back. I'm not sure that the market volatility we've had will be enough to stop the rate cut this time around, and I think the Fed will be very sensitive to accusations of political interference, of political sensitivity. Rate rise. So I'm talking about rate cut, we mean rate rise, obviously. So I think the rate rise for me goes through in December. I think it definitely goes through.
Okay. Which is the bigger risk to UK-based investors, Brexit or Trump's policies?
I think so if it's a UK investor that only owns UK assets, then the biggest risk is Brexit for sure. But I think if it's a diversified portfolio, the kind that we run, so I think which is more relevant to this conversation, I don't think Brexit can cause a big global sell-off, but I think Trump could. So I think the tail risks around Trump, the risk of a trade war with China, the alienation of Mexico that his policies will inevitably lead to. These are really serious global issues. So I actually think Trexit rather than Brexit is the key risk. For a UK investor, you can protect your portfolio against Brexit reasonably well by using foreign currencies to offset sterling. So you do have that lever to pull. But if all the world is kind of going to pot and trade war between China and the US is on the horizon, I don't think there's any hiding place.
Okay. Regarding trade agreements, Trump stated that the UK will be at the top of the list for new trade agreements when we Brexit. Do you see this happening?
Yeah, it's odd because he's actually pulling out of trade agreements. You know, he wants to pull out of NAFTA. You know, he's going to kill the Trans-Pacific Partnership. He's going to kill the Transatlantic Trade Treaty. So I can't see him rushing into a trade agreement with anybody right now. And I think the other sort of part of that question is that the UK can't sign any trade agreement till they get Brexit sorted out. So I think it's I wouldn't put a lot of credit behind that, I promise.
Okay, a couple of currency questions now come in. The questions are keep coming thick and fast. Where do you see sterling going? Or what direction for sterling now?
Sterling goes up against the dollar here. You know, I think sterling has troughed. It fell on the worries about hard Brexit. You know, the capital markets are very worried about hard Brexit. The capital markets hate uncertainty and think, you know, as I explained, that free trade is good. You should be in trade agreements with your biggest trading partners. So they see Brexit as just shooting yourself in the foot from an economic point of view. So they hate it. But I think fears of hard Brexit have peaked, therefore the pound has troughed. You know, I think we're already with this challenge to Article 50. The probability of a soft Brexit has gotten a bit higher. It may not be very high, but it's gotten higher. It's gone up from where it was. And for me, I think we move more in that direction. And of course, if I'm right that the dollar's no longer a safe haven, then certainly against the dollar the pound strengthens, and it probably strengthens quite significantly.
Where do you see the safe havens currencies?
So I think, I'd like to think the euro is going to be a new safe haven at some point, but I'm obviously worried about populist tendencies in European electorates as well. In the short term, you know, obviously the yen, the Swiss franc have proved themselves to be good, but you know, the Japanese central bank may have something to say about that as well. And what's happened in America has kind of upset the apple cart in terms of its plans and the G20 plans, which Japan has really been following, to not use devaluation as a kind of a tool for managing economic growth anymore. So I'd stick with Japan and the Swiss franc for now.
Okay.
That may not last forever.
That looks like it from us, guys. We've had lots of questions there. As always, if you'd like to talk to someone at 7IM, you can get in contact with your relationship manager. We are joined in the room by our Chief Executive, Tom Sheridan, and he's just going to pass you over to him now.
All I wanted to say is thank you to Chris, and I don't normally sit here on a webinar and say thank you to one of our own team members, but he's been here since about 1 o'clock in the morning. He's had an extraordinarily intense day. He's done really, really well in the run-up as well as during today, and so once in a while, a good pat on the back, and thank you very much is in order.
Thank you.
Great, thanks, Tom. Okay, as I mentioned, if you would like to ask any further questions, please do get in contact with your 7IM relationship manager. Thank you.
Thanks, everybody. Bye-bye.